can.
Ralph, can you share your screen?
Yep. You see it?
We have started the webinar and we can see your screen perfect. And thank you everyone for joining. And while we are waiting for the other attendees to join, I will just welcome you all. So hello everyone, good afternoon. We are glad you're here for our webinar on the role of ESG in shaping modern supply chain processes. My name is Heidi Chow. I'm the head of membership and business development for ASCI. And today, my colleague Sushma also joins me today. So Sushma, would you like to say hi to everyone?
Hello, everybody. I'm so happy to be here.
And so are you ready to take your business to the next level by harnessing the power of environmental, social, and governance reporting? Today, you will learn about the insights and strategies needed to navigate the dynamic corporate landscape and supercharge your supply chain operations. Our expert speaker, Ralph Stein, has much experience in supply chain planning and is here to help you succeed. Please ask questions and share your own experience. Thanks for joining us. Before we begin, we would like to remind you of a few house rules to ensure everyone has a positive and productive experience. First, if you have any questions or comments, please use the chat feature or the Q&A box to share them with the group. We have prepared some poll questions. We'll share this with you during the webinar. And this webinar is being recorded. We'll upload the recording to our YouTube channel after the webinar. I appreciate your cooperation and we hope you enjoy our webinar. Our expert speaker is Ralph Stein. Ralph is an associate member of Institute of Chartered Accountants of ANZ and has over 25 years of experience in finance and accounting, financial applications, reporting, transformation, change management, performance management, and analytical software space. He's currently the solution architect financial reporting applications at CCH Tagetik, specializing in the ESG reporting and supply chain process across Asia Pacific, where he's the AP lead. Now I will pass over to Ralph to start the webinar. Thank you, Ralph.
Thanks. Thank you, everybody, for
I think Ralph is experiencing some technical issue. So Ralph, we are not able to hear you and your presentation stops sharing. Ralph, can you hear us?
Yeah, I can hear you.
I think the internet connection on your side is not stable, so that's why the video, the sharing stops, and it stopped earlier as well. So
okay, I will see what I can do. Just give me a second. I'll just apologize for this.
No problem. Ralph, while we are waiting, shall we start the poll so people can start entering the question?
Do you want to do the polls quickly while I try and get this?
Yeah, that's what I think. So everyone, while we are waiting for Ralph to share his screen, he's traveling. So we all understand when you travel, the internet connection is something you cannot rely on. It's just by luck you can have good one. And this is one of the days that you experience some issues. So let's start the poll first. I just click the start. So you should all see the poll on your screen. And we have two questions. The first one is, where are you on your ESG journey? And the second one is, do you have a sustainable department or sustainable director?
Do you have another room that might have better internet connection? Because the internet in that room was
Thank you for participating. I see lots of answers coming in. For the comments part, I will let Ralph do that because he would like to understand all your experience, your journey, and also your plan in your company. And I can see Ralph find a new place. So hopefully the internet connection will be better on that side. Thank you for your patience.
Okay, let's hope it's better here, and I'm hoping there's not too much background noise. So let's see how we
Perfect. We can hear you perfectly.
Okay, let me share my screen. So if you want to end the poll, it gives me a good idea. Thank you very much all for doing that. It gives me a good idea of where people are on the journey, and it seems like a good percentage are actually starting their journey. So, so I'll just share my screen and we'll end the poll. So this just shows you that the results are showing that quite a lot of people are just starting their journey. So let's thank you very much. Now I'll share my screen. So you can see the screen now?
Yes, I can.
Okay, so today we're going to have a quick review of what ESG is, and then we're going to talk about ESG reporting and how it's impacting on the Australian corporate landscape. Then we're going to look at the supply chain and how it actually impacts suppliers, and then how we should actually integrate it into our supply chain decisions. And if at any time you want to ask a question, please go ahead and ask a question, and we'll take it from there. So here's a quick review of what ESG is. So ESG reporting has basically become very important over the last few years, with more and more organisations having to comply with it, and also more governments making it a importance in having companies do that reporting. The main ones that we've got at the moment are SASB, GRI, TCFD, and the International Sustainability Standards Board. And for companies that are actually reporting in Europe or have got subsidiaries in Europe, they will be impacted by the European taxonomy and CSRD. So there's lots of different codes around the world, and they are trying to reduce those ones to make them more standard, which I will talk about today. You've also got the different companies that actually do ratings on how a company is going. So, for example, down below there's MSCI, but there is other companies that do the ratings as well. And some companies have to get those ratings to ensure that they stay within the ability to enter tenders, which, again, I'll talk about a bit further on. So what is ESG? It's actually got, ESG is 3 pieces of information. It's environmental is the first one. And a lot of people, when they talk about environmental, they talk about climate change. Now, climate change, yes, it's very important, but it's only a very small component of what's impacted by environmental. Depending on the area you're in, you could actually be looking at the water usage, you could be looking at your wastage, and also looking at the circular economy and how that impacts on what waste actually comes from your product. So, for example, in Australia recently, in Penrith, they've actually had a bit of a recycling going on for people who have coffee in the morning, where they're capturing people recycle their coffee cups and the caps, and they've actually put them through a grinder, and they're actually incorporating it into tar, and they're actually putting it on the road, and they're actually finding that they're having a better tar is becoming more resilient because it's actually got a bit of plastic in it, which helps the water run off better and keeping the tar to stay around longer. So there, people are looking at different ways of doing things and using things. Another thing is, for example, with the rubber tires, where they're looking at doing things and putting them into soft play fall areas and actually putting them into tar again. So people are looking at how to use their products and make sure that they're not going to landfill, but they're being used in other areas. That all impacts on your environmental. The next one is social, where you've got the human capital, where you're looking at your health and your safety. And again, a lot of people here look at diversity, but there's been recent articles out there that's saying that diversity, while that's important, everybody knows that companies are doing stuff in this part. So they now want to see what they're doing from a safety perspective, and what they're doing in the overall helping the staff with their access to health and other information. The third part is governance. And this is where they basically look at how the board has got a diversity. Is the executive pay tied into how the company is going from an ESG perspective? And is there any tax transparency? So, for example, you've got the new tax requirement for to Pillar 3, making sure that the company pays a minimum of 15%. So what's happening in the ESG landscape for Australia? So why do companies adopt ESG reporting? Well, there's a couple of major reasons why they're doing it. One is that there's, of course, the compliance risk of if they don't do it, then they could be in trouble. But a lot of companies are also doing it because of the reputation. So we are seeing a lot of companies doing it from a reputation perspective, because they want to make sure from a customer perspective that they're doing the right thing. Also, are less than your competitor, you actually can win deals because companies
Ralph, I think we lost Ralph. Ralph, hello, Ralph.
So
Ralph,
from
can you hear
ASX
us?
200 perspective, we're finding that there's 75% of the companies are actually doing reporting how it's going. People don't realise that in Australia, the stock exchange has been asking for TCFD reporting for quite a while, and therefore we are actually more advanced than some other places. But because it's not mandatory from a government perspective, it's not talked about as much. So, for example, we had the ASCI announcement at the end of last year. Making sure that they are actually keeping the information that needed for TCFD, and actually reporting stuff on the director's statements. So it's very important that directors keep that.
Ralph?
Yep.
Oh, hi. We lost you for a few seconds earlier in your presentation, and I got some suggestion from our audience. They suggest you turn off your camera, only share your screen. It may
Okay.
help. We all
That's a good
learn from
idea.
each other. Yeah, so
Yeah, exactly.
it's
Turn that off.
you have to share your screen again because we cannot see your presentation.
All right. So I've turned the video off, and hopefully that will improve the information. So, okay. So, as I was saying, the ASX said that from 2019, companies needed to be looking at doing their TCFD reporting, which made it very important for companies to start getting on their journey. Also, even though it doesn't really affect companies as much from a supply chain perspective, APRA has then issued some practice guidance, and that's actually been very important for banks and insurance companies, which does impact the supply.
Ralph?
Yep.
Excuse me, we cannot see your presentation. And can you either email me or Kathleen your presentation? Maybe we can share from our side and you just speak. Maybe that is better.
Yeah,
Yes, give me 1 moment and I will share it for you, Ralph.
Okay,
Thank you,
thanks.
Kathleen.
I apologize to everybody that this is happening. It wasn't
No
meant
worries.
to be.
We all experience that. So and it's good to have Yeah, I can see that now.
Okay, you can see it now? Yeah, I got the
I
stop
can see
sharing.
it.
Okay, so basically, from an APRA perspective, it impacts the banks and insurance companies, and they basically need to take that into account when they're actually working with companies like a supply chain to make sure that if they're lending money, they're doing something from a green perspective, because they need to separate out those that are for green loans and those that aren't. And sometimes they actually charge different interest rates, where ones that are for green are actually get a cheaper interest rate than those that aren't. So that's why I thought I'd bring that in. There is an Australian taxonomy that's going on at the moment, where there's discussions on how it's going to be deployed. It's still in the initial phase, but they hope to announce something towards the end of the year. The government did some reporting on ESG, and they actually did a survey earlier this year, where the responses were due in middle of February. And here are a couple of examples. So they're sort of trying to say, when should people start doing the reporting? And most of the things that we think are going to happen is for the larger companies are going to have to comply with mandatory reporting by 2024-25 financial year. So really, companies need to, if they haven't already started, they need to start their journey. Not only because it's becoming mandatory, but where I have heard of, for example, one company where they were thinking, well, they're a private company, they don't need to do any ESG reporting for a number of years. So they were looking at trying to start their journey in 2027. Then they received some information from a number of their customers, because they were all in the hotel industry, where they were told that if they didn't get a level of certification on ESG by the end of this year, starting from next year, they won't be allowed to be included in any tenders. So you've got to think about it from that perspective. I've also heard stories from Europe where some of the companies are saying that if you don't start providing ESG data, then we won't be buying from you. So it's impacting your business. And also I've heard of Amazon, Apple, and some of the other big companies are actually helping their suppliers on their ESG journey, because it actually helps them with their reporting. So there is lots of things happening in this space. So companies really need to think about it and start getting onto it as soon as possible. So what's the significance of ESG in the supply chain? Well, basically, you've got the scope 1, scope 2, and scope 3 impact. And as you can see, scope 1 is just really the direct information from company vehicles and company facilities. Scope 2 talks about the electricity that's used in the organization. But scope 3, as you can see, is very broad. It's got 15 topics, 8 from upstream and 7 from downstream. And so therefore, if you are, for example, a transport company, you need to be making sure that you can tell the people whose goods you are transporting how much scope 3 is involved in actually moving the goods from one site to another. Or if you purchase some raw materials, you need to know how much scope 3 is in that raw materials you purchased, because you've got to take that into your actual calculations. And you need to also consider that you need to do scope 1 plus scope 2 and scope 3, and then work out the per unit emissions for your products that you're selling, especially if you're passing it on to another producer or whatever, so that they can actually have the right emissions in their information. So it is quite a complex area, and you need to make sure you take it all into account. So what are some of the business challenges that we see? Like 3 or 4 years ago, people used to be able to say, I wasn't aware that that was an issue with my production. Like, for example, I might have had some slave labor overseas, or I might have been getting stuff from Congo where slave labor is impacted. So you can't use that as an excuse anymore. Companies need to understand all the impacts within their supply chain. And one of the ways that you can do that is actually create ESG metrics for the suppliers on how that you expect them to give your information and what level you want. So you might even set them targets saying, okay, today you might be giving us 100 kilos. Next year, we want it to be down to 90 kilos of emissions. So you can actually set targets and track them. You need to always be communicating with your individual businesses that you either supply to or get suppliers from, to ensure that you are keeping them a track of what you're doing, especially if you're improving your emission by reducing them dramatically. And again, your competitors aren't. It's a good part where you can actually get more customers by being able to send that information to other people and let them know. The other thing is supply chain mapping. Map each of the parts of the process. So, for example, I heard of a story where a company was looking at spending millions of dollars replacing their whole production line. They actually did a supply chain mapping, and then they went through it and realized that there was a couple of machines in that map in the production line that were quite old, and they were the ones that were causing the bulk of the emissions. So they were able to reduce their capital expenditure to about only 500,000, replace the two machines that were causing the most problems, and they were actually able to reduce their emissions by 50%. So you need to understand where your emissions are coming in your supply chain and what you can do in that area. You also need to understand what type of products you're using to see whether there's anything you can do to maybe replace a plastic one with something that's naturally available, or what you can do from a circular economy to get information to use your products in different ways, and what opportunities are available, right? A lot of people, when they talk about ESG, they always talk about the risks associated with greenwashing. They talk about the risks associated with all the emissions you have, but they don't always consider the opportunities by trying to do something better or being able to do things differently that might present for the business. So you need to think about that as well. The other thing we are seeing more happening is the contracts. So when you're doing a contract for the purchasing of information, some people are actually now making sure that they set mandatory ESG requirements in their purchase orders. And also some companies have even got to the extent where they're actually asking for those numbers to be assured by a separate organization, third party, or that the company can actually go in and arrange for assurance to happen to ensure that the numbers that they are being given actually are appropriate and compliant, so that the company can't say, well, I've just taken those numbers, I trusted them to be true, therefore I can't be greenwashing. You need to have full assurance that the numbers that you're using are correct, because you can still be accused of greenwashing, because you can't use the excuse that I had no idea the vendor did this, right? You have to be very careful about that. The next one is impact.
Sorry, Ralph.
Yep.
Sorry for disturbing. We have an audience suggesting, because do you see in your screen there is an Zoom message?
Yep.
You can hide it. Yeah, it just blocks some of the presentation. Thank you.
Okay, that's all right. I wasn't sure whether that was something I could just see or everybody else could see. So thank you very much for telling me. Okay. So some of the impacts for suppliers. So basically, you need to be aware of how it impacts you as a supplier to another company, right? Because customers may not purchase from the company anymore if they're not doing ESG reporting, as I mentioned with the hotel industry and with the suppliers in Europe. And we are seeing that happening more in Australia. You can be excluded from tenders, especially it wasn't just for the hotel industry, but we're hearing this more and more, where companies aren't actually being allowed to tender because they can't. One of the requirements of the tender is they have to answer some questions on environmental and where they are on their journey and what their KPIs are and what their average scope 3 is. So if you can't answer that questions, then you can't actually submit the tender. We are also seeing some companies are on the wrong end of litigation. A very good example of that is you've seen a number of that's taking some companies for greenwashing. Overseas, you hear about it all the time. And recently we had heard a talk by some people in the legal profession that they said that Australia was the second most litigated country in the world for ESG reporting after the US. And the reason for that is a lot of companies to start with were promising that they were going to do these reductions. And then the activists or other people were trying to say, okay, you promised that you were going to have these emissions. Can you prove how you're going to do it? Because were you just saying it because you wanted to give the impression that you were doing the right thing when you're not actually making anything happen on that journey. So you really need to understand what you're doing and making sure that you comply. The other thing is that there is actually some, with the principles are happening with ESG, we're actually going to see that companies are going to be required to comply with the necessary requirements from ISSB and all these other ones. And some of the governments are going to be soon putting in their financial penalties if people don't meet the necessary reporting. But there is also a huge amount of reputational risk as well as commercial, as I was saying, where companies, if they aren't doing it, they won't be able to supply, and also their commercial viability could be impacted. And then you've got from a supplier perspective, as I was saying, banks and insurance companies are actually looking at it, as are investors, where they're looking at a company to see how they're going on their ESG journey and deciding whether they should actually invest in them anymore, because if they're not doing something to reduce their emissions, then the funding mightn't be as easily available, or it could be more expensive, and that could actually impact the profitability of an organization. So how can we integrate it into the supply chain? So some of the things we can do from an integration perspective into the ESG is basically we've got to look at how we can do the supply chain assessment, right? So you've got to make sure that we can do things from a circular economy perspective, so we can look at the supply chain and say, okay, what are we doing in here and how can we improve it and how can we reduce our emissions? Now, it could be that maybe you have got the capability of having a factory where you can actually put solar panels on the roof and attach a battery. So therefore, you've actually been able to reduce your emissions. And by doing that, you've been able to enable the company to increase the price and be able to still get increased business because they can show that your product emissions is less than your competitors. So you've got to actually go through the whole supply chain assessment and look at the different parts of the organization. And you've got to think also from a scope 3 perspective within the organization, what can we do to maybe help our employees get to work easier so that they're not all driving in the same car or individual cars? Can we do carpooling? That way we reduce the emissions. Maybe from a business travel perspective, do we buy offsets for when we're doing it? Or do we try and do more by Zoom meetings? So you've also got to look not only from the ones you got more control over with scope 1 and scope 2, but you could also need to look at what you can do from a scope 3 perspective to not only reduce it, but today you might be sending your stuff interstate by rail, which would be good, and you might want to move more into that because that doesn't have as many emissions as sending it by road. So you've got to look at the whole end-to-end process and understand where you've got the highest emissions or the highest impact, or whether you can also do offsets. So, for example, there is a bank in Australia that actually goes through and has bought some land up in North Queensland, and they're actually planting trees every month and using that as their carbon emission offset. So they're the things that to be considered. The other thing is setting strategies and targets. So, for example, there's a science-based target which you can set, or you can even have individual ones from an organization perspective, where you can set the targets where you might say, okay, currently we're doing X percentage and we want to reduce that by 5% year on year, if that's what the science-based target, or you might even think you can do it better by setting a 10% target. Then you need something to be able to track against and see how you're going to achieve those objectives, and also what the impact on the product cost is. So you might come up and say, okay, I'm going to do a 10% reduction, but you might find that by doing that, you're actually increasing the cost by 15 to 20%, which might make it not viably possible for your product. So you might need to reassess your strategy and your target to bring it down to maybe 5% because it only got a 6% increase in your product, which the market can bear. So you've got to make sure that the first two, your chain assessment and your targets and strategy, are all in alignment so that your product is not becoming too expensive compared to the competitors, unless you can show that that increase is a payoff that the other suppliers, companies who you supply will actually bear, because it's actually helping them reach their net zero faster because you've been able to hit your goals faster. So it's understanding what the interaction between you and as a supplier and who you're supplying to, what they want, right? Because if they want to hit their goals faster, they might be prepared to pay you more so that you hit your goals and therefore they hit theirs. And that's where the next one comes into consideration, where you collaborate with your suppliers and your stakeholders to understand what you can do. So from a stakeholder perspective, especially if you're doing GRI reporting, you need to be able to doing a materiality test every year. And that materiality test should be looking at what the stakeholders, both internal and externally, want, and understanding how that actually can impact on what you're supplying or who you're supplying, right? And it's also, as I was saying, both who and supplies you and who you supply, because that all needs to be collaborated and all needs to now be a more meaningful discussions, where in the past you might have just said, I'll buy product A from this person, the cost is the cheapest, so that's all I worry about. Well, in this new environment, you might have to say, well, I'm buying from person A, he might be the cheapest, but his emissions are 50% more than his competitors. So maybe I have to pay a little bit more, and then the emissions might only be 10% more than the standard for the industry. So therefore, you can also say, okay, I'm prepared to pay that little bit extra because it gives me a good benefit. And you need to be able to compare what an individual supplier is against what the industry standard is, to make sure that they're within a reasonable range of what the industry standard is. If they're better, that's great. But if they're a lot worse, well, then you need to be thinking, is it worth staying with them, or should I be working with them to help them reduce their emissions so that overall we can actually hit our targets? The other thing is you need to do is work with the external agencies. Now, that's not just government organisations. It could be associations. So, for example, for the cement industry, they've got standards that they want applied to track the amount of emissions based on clinkers and all these other things. So you need to be able to get that information to ensure that you can comply. So you need to understand whether it's a government thing or an association, or whether it's just even a board report or whatever. All these different stakeholders will have different types of things that they want. And even some of the government organisations, different parts of the government could want different information. Then, of course, you need to be, if you have set targets up above as part of your your strategies, you then need to be able to monitor your performance against them and ensure that you're achieving those targets. And if you're missing the targets by a large amount, you need to understand why you're missing those targets and what you can actually do to improve that. How can you actually change your operations or your production line, or how you're doing it to actually ensure that you're meeting your targets, whether that's redoing your strategies, or maybe it's saying, okay, we made a strategic decision based on ABC, they haven't worked. Maybe we now need to look at doing a different type of strategy where we're looking at different investments or different suppliers to help us meet our targets, so that we can get the necessary funding we want, because we promised that to the bank or we promised it to an investor. So we need to make sure that we are achieving it. The final one is you need to incorporate innovation and technology. So some of that could be a new machinery, where you might say, okay, today we've got machines that are 20 years old, they're getting to their end of their life. But then you might find that some of the machines, even though they're getting quite old, they are still very efficient and don't have much emissions. But there might be something you could do to tweak it to make them so they've got no emissions, or make it link it into a solar panels and a battery, so therefore it's pulling power from the environment, not pulling it from the grid, and therefore enables you to be able to meet those targets. The other one is the circular economy, and that's a huge thing at the moment, right? Because people are looking at very much, how can we ensure that what we produce doesn't end up as waste? Now, there's numerous ways you can do it. Some people actually have got as I was talking earlier, with coffee cups and coffee lids, actually recycling it and making it therefore used for tar. But other people are looking at saying, okay, we will actually make it that people have to buy a reusable cup, or that they have to come to us for with their own cup to get their coffee in the morning to try and reduce the waste. Some phone companies are trying to say, okay, you bring us the old phone back and we'll give you a new phone and give you a discount, so that they can make sure that they're reducing the waste. So companies are trying to see how they can all do things. Even some companies are looking at trying to take plastic out of the, we do know the shopping centres have, which is a bit of a pain because those bags came in very handy for doing other things. But looking at how we can do other things with plastics and take them out of the environment. Because last year I actually went and the Walder's Clue actually had a day where we went and did some clean up Australia type of thing, and we actually went to a beach in Manly, Australia, in Sydney, and we actually found quite a lot of microplastics. So what that was the council comes through every morning and they go over the beach and they actually pick up all the big waste or rubbish that they can see, and they take that away. But we were actually sifting the sand, and we were actually finding quite a lot of plastic little pieces that were in there, and that's what gets into the fish, and also gets into us via the fish. So therefore, you need to think about what you can do from a circular economy to try and ensure that plastic isn't part of the product, even to the extent where some of the producers are stop having to do the things with plastic wrapping. They're now putting it into brown paper bags because they know that can actually not as bad an impact as a plastic bag. So this is where companies are looking how they can replace things in their production to not only improve the emissions, but also improve their impact on the environment from a waste perspective. So this is where organisations have to consider the overall impact of their products, not just look at one component of it. So how can we help? Basically, our Walder's Clue has a vision to empower businesses to build a healthier, safer and prosperous, resilient world. And what we're trying to do is help them use systems to analyse their numbers, enabling them to identify strategic things that they can do, because they can, by being able to drill down on numbers, because it's not done in spreadsheets, gives them ideas of saying, okay, this particular production line might be more efficient than this one. So therefore, what can we do from an emission perspective to replicate it? And so we hope to provide solutions to corporates to help them drive insights and actually meet their regulatory compliance. The way we do that is by doing a three-phased approach. The first phase is basically a very simple one. We provide a tool that allows companies to capture their information and allows them to meet their regulatory compliance. Now, companies can stop there, but they're missing a huge opportunity. I used to work for IBM, and our CEO, Jeannie Remedi, said that data is the new gold, right? And with ESG reporting, you've got so much data you're capturing from not only a financial perspective, which companies are used to doing, but you're also capturing operational data, HR data, waste data, lots of other information that you never used to have before. And that can help an organization with its strategic decisions. And that's where phase 2 comes in, where you start linking your ESG information to your financial business plans and seeing what you can do. So for example, you might, as I said, you might decide, okay, we want to put some solar panels up or put a battery on, and how's that going to impact our profit and loss from a capital expenditure? It's going to increase our depreciation for the next 5 years or so, but we should see a corresponding, maybe not as much, but a reduction in our electricity from the grid. And with electricity being so expensive, you might find it actually has more of a benefit than it does depreciation. But you do know that after the 5 years when the depreciation completes, you definitely will have the benefit flowing through to your P&L. So you've got to look at some of these things as not only short term, but medium to long term. The next phase is where you look at basically how can we do things from a product portfolio, bringing into account the circular economy, but also bringing in how we can optimize how we're doing things and maybe restructuring how we're getting the raw materials or the services we're providing to make sure that we can provide the best benefit to the organizations and get the ability to look for opportunities. So most people, when they look at ESG, as I said earlier, they're looking for the risks and how it's going to impact them. So for example, they might have a factory that's in a location that might get flooded occasionally. So the long-term plan might be that, hey, we should be moving that factory to a higher location, but that's going to be a take a number of years because we've got to A, find a site, we've B, got to make sure it's the most energy efficient, maybe we've got to put some solar panels on it, then we can move the production facility there. And what's that going to cost us and what's the benefit going to be? And if we do that, what innovations can we bring into the process? So that's where you can sort of bring it into your long-term corporate strategy and ensure that you're getting to the best benefit from looking at your ESG data and the impacts on the supply chain. So how can we help with that perspective? We have got a system that basically allows you to comply with EU taxonomy, GRI, SASB, and we're just in the process of updating it for the new ISSB standards that were announced in June, and they should be coming out shortly. We have got the ability to link to any system, but we are one of the only applications that's on the SAP marketplace for those people who are on SAP, because we can run on SAP HANA, which therefore gives you the capability to link to SAP very easily. We are 5.2 billion company, and we therefore spend about 11% of our revenue on R&D. And Wolters Kluwer has got a long history of working in the regulatory space with for example, the Master Tax Guide and other informations for helping governments with their information. So we're used to working in the regulatory requirements, and we are keeping our tool up to date with what's happening. And therefore, by using our tool, we'll actually be able to help you look at scenarios and reduce your risk from a sustainability perspective. Just overall, while today's been more about ESG and supply chain, we basically, here's a very high level overview of our products. On the left-hand side, it shows you that we can get the information from numerous different sources, whether it be text, CSV, or Excel or spreadsheet, and we can link to many different data sources like SQL Server, Oracle, SAP, and we then can take that data and transform it. So if you've got numerous different states and they're all different locations and they've got different systems, we can actually bring the data into our system and translate it and load it and standardize it on a code. So basically what that means is if location one's got code A and location two's got code B, we can actually bring them both in under code C so that you're looking at consistent data for the information that you're looking at. We also do budget. We are a modular system, so you can buy the module that you require, and we can do budget and forecasting, statutory consolidation, account reconciliation. We have got some smart systems for doing workforce planning and CapEx and cash flow. We also got the regulatory reporting, which also, apart from ESG, does cover IFRS 16. We have got supply chain software that we do. Basically, we're looking at automating as much as possible. So we are actually have just recently released an IBP, product integrated business planning, which links our supply chain planning in with our budget and forecasting to give you end to end. And we've also put on top of that a promotional planning for CFM like customers. We also can do AI for supply chain and also for predictive intelligence for doing forecasting. And we can also help with the reporting. And also, as part of our ESG solution, you get your collaborative office. So we can link into Microsoft Word and PowerPoint while also getting the information to Excel and from a read-write perspective. And that basically comes to the end of the presentation, and so I'm now open for any questions.
Thank you, Ralph. I was told that the chat box is not functioning. So if you have any questions, you can use the Q&A box. We'll be able to answer them.
Questions and answer. There's one question from Serg on any suggestions on carbon emission calculation for transport. Basically, there is a couple of different options. One of the ones is basically you can look at the per kilometre travel. Other ones are looking at how to do the based on the amount of, especially if they're company-owned vehicles, you can actually look at the amount of petrol or diesel that's purchased and calculate that. So there is a couple of different options that are available depending on which method you want to use. Walters Kluwer doesn't actually offer any advisory support for clients, but we do have partners that do, and we're quite happy to put you in touch with those different partners. We have got partners in like the big four, EY and PwC, but we also have got smaller ones like Vantage Point and Quinetics, who we can put you in touch with if you would like some advisory to help you come up with your where you want to go with ESG reporting. So another question was, any advice on conflicting priorities? For example, company needs to go down the route of renewable energy, but solar panels have a high risk of using forced labor, modern slavery, to manufacture it. That's a very true statement. Basically, there is numerous different suppliers out there who do solar panels, and you need to look at where, like some of them are actually manufactured here in Australia. They're a little bit more expensive, but there is other companies where, yes, you need to check into some of the background. And I was watching a TV show the other day that was quite real funny in one environment where it was, I don't know whether you've heard of it, the Good Life, and they were saying, well, in the past, somebody used to get 100 good points for giving somebody else's roses, but today they get minus 1,000 because was the roses done with pesticides, etc., which is very relevant in today's society. But yeah, you need to look at where things are going and what you need to do in that environment. But most of the suppliers in Australia, like some of them do get them from very what's the right word? Very forgotten the word. They check who they're getting purchasing the actual solar panels from and making sure that they are doing things correctly. So yes, you need to do a bit of research, but there are ones out there today who are ensuring that modern slavery isn't being used to manufacture them. Another question is, could you comment on data sources for Scope 3? Is there enough data out there? Yes, there's enough data out there in some respects. Like there is certain applications or certain companies who provide industry standards. So, for example, if the industry you're working on or getting information from can't provide you that data at the moment because they're still just starting their journey, you are able to use industry standards and say, okay, based on the information we have, you go out to the people who are supplying you and say, okay, you've got 12 months to give us your Scope 3. Otherwise, we'll start looking at going somewhere else. And in that time, you just use the industry standard and say, okay, based on what we know from the industry. This is what we believe the emissions are, and we are looking at improving the accuracy of that over the next 12 months. So as long as you explain where you're getting your data from and how you're doing it, that does help. But for example, if you're looking at your scope 3 of your staff, like how they're traveling to work, well, that's where you need to be doing surveys of them and understanding that on a regular basis to see how many people are coming from a long way away and how many are using public transport and how many are driving, and if they're driving, where they're coming from and are they doing big distances. And also, for example, if you've got travel, is there things you can do from an overall perspective to reduce that travel? I do know, for example, I've just come over to Malaysia to give a talk, and the reason for that was that it was more, sometimes it's still more efficient to do things face to face, because of the trying to do them via Zoom isn't as efficient. Yes, it does reduce the cost, but it mightn't be as efficient from a seeing how people are taking what you're saying. Being in the room is sometimes still more important, and also for building up relationships, right? It's still better to be in the room with people than seeing them face to face, because it's for certain cultures that's more important. So there's things that you need to consider, not only from a overall scope 3 perspective, but you need to also consider the benefit and the payback. And maybe what you can do is, as I said, you can pay extra for a ticket and do a carbon offset, or you could be looking at doing different ways of having a tree farm or whatever. Like they're things to consider. And thank you, Janet, for sharing that. She said there's an app for automatically measuring employee commute in place of surveys, and that's in the Q&A section of the chat, where the website's https powerhour.io, which I didn't know about. So thank you very much for sharing. It's always nice to learn something else new as well, and I'll have to keep a note of that site. Is there any other questions? Well, I apologise profusely for the technical issues that we had at the start, and I hope you all found that informative and interesting. And I thank you very much for your time. Back to you, Heidi.
Thanks, Ralph. And thank you all for joining us in this webinar. And thanks, Ralph, for the great presentation. And I hope you find the information shared today useful and insightful. Remember to apply the knowledge gained in your work and share it with the others. The webinar recording will be shared with you and uploaded to our ASCI YouTube channel in a few days. Don't forget to check out our website for more resources and upcoming events. Have a great day. Thank you.